Hi traders, it is the 23rd of June 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at a weekly vertical bar chart of the continuous contract of gold. I think this is actually bearish here. We have a double top into the upper trend line of this bullish ascending channel here. And we do have here a rather large effort on this retest. I think that's distributive. And then we've encountered some supply. Now we are kind of trading into the 200-day simple moving average. I think that entices some buying, but ultimately I think there's a pretty high probability that we break back down and we test this lower trend line that's present. Alright, so now we're looking at a point and figure chart. This is a 25 box size. We can see that demand is contracting on this retest, right? So here's this prior level of support that's present, and we're back testing it, and we may actually be confirming this as resistance. I can see that demand is contracting, so there's less demand into this retest. If we get a count, I think I would use this. So we have 1, 2, 3, 4 boxes. So 4 times 25 gives us 100. So I think that if we break down, our price objective would then be 1156. If we break higher, it would be 1356 when we retest highs. So we've, at the present time, I would say we've built the $100 cause, and that demand is contracting. In the presence of this contracting demand into this resistance zone, I don't see a lot of supply yet. So in other words, if prices were to break down into this 1156 in the absence of sellers, that would be a very strong buy. I'd recommend jumping on that. So now we're looking at gold. This is the 515 reversal chart. This is kind of like a candlestick Renko chart that I've built. We can see that there's a pretty heavy buying imbalance. So there's been a lot of participation, into this rally. Is that buyers? Sure, there's some buyers. Is that some shorts covering? Sure, there's probably some shorts covering. But it looks like we've actually rallied back in, and we're at this prior level of support. It looks again just like we're in the process of confirming this prior level of support, maybe as resistance. And here, this indicator that I have attached is the depth of market. So this is the order book, and as of the close on the order book, you can see there is a lot of entries here to sell this area. So we're seeing a lot of selling imbalance, and that actually correlates maybe with the supply that we saw here on the Mike's inbox wave, right? We have a lot of supply up here, a lot of sellers that want to sell this zone, and we actually encounter some supply. You can see the selling imbalance that's present there. So where price is going to go, I would speculate that we'd break back down and retest this level, which is 248 or so for support. I do see that we have an inverse head and shoulders is present. This would be the neckline. So there is the potential that this inverse head and shoulders would squeeze and put us up there. And that actually would give us, if we go from here to here, 1259. That would put us into the 1274 range, 1275 range. If we look at a daily chart, the breakdown that I mentioned here on this previous chart would put us down at 1248. 1248 is right about back testing these lows. So it's pretty logical that we rally into this red line that's present here, into the mean, reject it, retest this level here of support, confirm that bulls are in control, and then rally back into this zone that's present. So I do see that we have some buyers. We still have some supply, so I think we need to confirm that there's no more sellers. So having to make a decision or a bias here, it looks like we're trading in the prior resistance. There's a good likelihood that that gold drops. We back test this prior level here, and then it likely rallies back into this zone.